Hey guys, on this week's episode of the Four Horsemen of Real Estate podcast, our guest is going to talk about what it's like to build a $70 million real estate portfolio. And one of the interesting aspects that we get into is the difference between acquiring 10 units and 1,000 units, what it's going to take in that type of mindset. Also, how to set larger goals earlier on with Shane Unruh on today's episode.
When the ones around trusting their word, they walk the talk in the world of investment, they make their mark.
Ladies and gentlemen, Shane Unruh. Shane, great to have you on the show today.
Thanks for having me. Excited to be here.
So, Shane, we're going to jump right into this thing. And, currently, I believe you're a real estate professional, investor with 70 million under management. Amazing. But I want to really kick this off really quick and just go, how in the world do you start from a mobile home and scale up to 70 million? What's the secret? Give us the secret.
Yes, I'll give that story very briefly. Farmed kind of my whole life. We had an operating business. We owned and operated a gym, and we kind of got it as it was to scale. It wasn't going to grow a whole lot. And how I got into real estate was I read an article in Forbes, and it was called Mobile Home Park Millionaires. And I read it, and I'm like, this makes a lot of sense. You just own the dirt. You don't own the actual houses. Yeah. So I was like, I like the model, and then I guess it's fate or divine intervention, something. But the park in our town went up for sale. And so I looked at it, and I remember getting the numbers. I'm like, this is a ridiculous price. Would never make sense when I seen the price. And then I got the numbers, and it just kind of clicked for me. I'm like, this at the time thought it would be passive, right? And I'm like, this is a passive investment. I'm probably going to make as much here as I will with my operating business where I work 60 hours a week. And so we got creative and we were able to buy the park. So that was kind of our first step in. And then we bought a second park and we did a whole flip, learned that real estate is not passive whatsoever. So that was the first step into real estate.
Yeah.
And then from there, we got into, we realized pretty quickly you can't scale mobile home parks in Canada very easily. There's not enough of them, and they're usually, if they're in smaller communities, it doesn't make sense. So we got into multifamily. So we moved in 2020, we moved to Edmonton. We had a couple small buildings already, but that's when we really started the company that we have today. So in the last 4 years, we've grown. We're just under 400 units now.
Now, did you have a lot of money to be able to buy that mobile home park when you got started?
No, not at all. Never really. I mean, starting out, it was always bootstrapping everything. Like we got creative. We did vendor financing. We pulled money equity out of the gym. We did everything we could to get that first one, right? And then the next one was the same, and the next building. It always was like like every building I bought for the first little bit was like, I have no idea how I'll ever get the next one, right? And I think that's what catches a lot of people is they just don't take that step because they're like, well, I don't know how I'm going to do it. But
okay. So tell me I'm scared to ask, how much did it cost to buy that first mobile home park? Not a mobile home, to buy the entire park.
I'm going to say the park itself cost $600,000 to $700,000, something like that.
Okay.
And it was big. It was like 30 acres or whatever. It was like a big park, but it just was a small community. The rents were very, very low when we took over.
So what were your secrets to scaling over that next little while? Because you were saying you ran into some troubles there trying to, I got to figure out the next deal. How do I come up with the money? What were some of the tips and tricks that you can share with us about how you went from 600,000 to over 70 million? What were some of the early tricks that helped you to get bigger and bigger?
Yeah. So for me, and the biggest thing, and it happened pretty quick. Like we had bought the first park, and we did a big, almost like a burr on the park. So we fixed the roads, we renovated it, we did all of that, and realized that now the park's worth a lot more than we had paid. Right. So you could I understood because I'd always heard about this on bigger pockets.
Wait, you did a burr on a trailer park?
Yeah, it's essentially the same thing. We went in and the rents were low. It was in a very, very, Manitoba's very strict rent control. So it's a huge process to get rents up, but they were way under market. So we actually improved the park. It was so bad. I had I was a country kid, so I had like a truck with a 6-inch lift. Like I was like that guy.
See, I told
Yeah.
you. I knew there was a truck involved.
Yeah. And it was, the roads were so bad that like I couldn't drive that truck on some of them. Like it had been neglected very badly. So we spent a lot of time. We did that. There was lots of like the water mains were leaking all over. It was there were drug dealers in there. We had to get out. There were really like dilapidated trailers. So we moved new trailers in. We took the old ones out. We redid the roads. We did everything. And the government approved a rent increase of a very little amount, but it was enough that on that scale, it made, it brought the income up, just like if you went into a crappy unit and did it. And it kind of, there was that aha moment where it's like, hey, we spent 2 years doing this, but now the value is, close to doubled. Like it made a huge difference. Yeah. So you could see how it would work. We knew real estate was the path we wanted to go. At that time, I had already got in my head around the multifamily side. But what really changed was all in around that kind of time. I had read the 10X rule, which I'm sure most people have, right?
And good old Grant Cardone.
Yeah, and similar to a lot of the books that have really changed my life, I read them multiple times. Me reading it at 23 versus me reading it at 33, I take a lot different things out of it, right? So at that time, I was just like, hey, set a huge goal and like bigger than I ever thought. But what the book, it describes a lot, and I do this still today, is you set the goal way higher than you thought you could achieve, and then you work your way back. So it's like, as soon as I did that and I set a goal, initially my goal was 10 units and then it was 100 units. But when I set it at 1,000, I was like, I do have to switch everything that I do. I know I can't fund this myself. I know I can't buy 10-unit properties. I know I can't buy single family homes. I have to average, if I want that in 10 years, I have to average 100 units a year. That's a big property. I have to be in a market that works. So it totally changed my plan. You work your way back and then you figure it out from there. So it's like, hey, I need to figure out a mechanism to raise capital. I need to figure out what that structure looks like, right? A lot of guys get caught where they just like, hey, my aunt's going to give me some money or my friend's going to give me some money. We're going to do notes. And then you'll get to a scale, maybe 30 units. And you're like, crap, now I have 20 different notes on here. I can't get proper financing. It's like a whole big wheel. So right from the beginning, when we knew we were going to do this, we structured it properly. And because we had that long-term plan, right?
Now, what are some of the elements, though, that you had to start looking at and going, okay, these are the elements. If I want to build 1,000-unit portfolio, these are the elements that I'm going to need?
Yeah, I think the first thing, and you kind of nailed it there, when you tell people ask me all the time, like, where do I start or what do I, and that's, you have to figure out what you want out of this. If it's going to be a full-time thing, and in my opinion, real estate works a lot better at scale. It is hard to make it work small. And before we moved here, we had 2 small 8 units. It's a tough business. And it's, if you know you're going to scale, I guess the vehicle was the most important thing. It's like, we have to have a way to bring investment in, for one, legally. A lot of people you see on social media and stuff that are just doing small deals, they're not, that none of that is compliant with probably the way things are done. So like, there's all of that stuff, right, that you need to know at the beginning, kind of like, if you're going to raise capital, here's what you're looking at, right? So the first thing was the vehicle, and we set it up. I set it up for myself or my family or my friends that want to invest, and I wanted it to be like, tax efficient for them. And so we set the vehicle up first, and then if you have a longer term goal in mind.
And when you say vehicle, you're talking about, like, for instance, holding company, a GPLP, mutual fund trust, these types of structures.
Exactly. Yeah.
Okay, perfect.
And no right or wrong way to do it. We did the GPLP structure because I like that the investors have limited liability.
Yes.
Depreciation flows down. There's a lot of benefits to it. You can have benefits in any way that you choose to do it, but that's the one that we chose. And then I think, like, as you're building out that portfolio, the easiest thing to do, or what people tend to do, is like, once I bought an 8 unit, well, I know how to do it. I know what capital, I can buy another 8 unit. I can buy another one. And it's just like, that's comfortable. That's easy.
Yeah.
But if the long-term goal, let's say, is 1,000 units, you can't do that. You can't do 10 units. You can't do even 20 for very long. Right.
Yeah.
And you have to think of, what is the exit of that? So now, and I tell people this from experience, not from like, hey, look at what we're doing, but like, when you buy generally a 100-unit property, you're dealing with quite a sophisticated seller, right? So it's like, we bought 111 unit not long ago, ended up, it had aluminum wiring. Well, just they right away went in, fixed it all, right? So it's cost them whatever amount of money, but it wasn't a problem because the deal amount's big enough and it made sense. I had an 8-unit building. The day that we bought it, the first one I ever bought, the day the sale was to go through, the guy went and pulled the camera system out of it, to say, because so he took like $2,000 worth of cameras because it
Yeah.
wasn't technically in the contract. So like you're dealing with a different type of person.
Mm.
So maybe you can buy from those people and that's fine and you can turn the
Yeah.
building around, but who will be buying that from you, right? And in what market? So when you own small property, and for sure if it's not great property, the person buying it from you is going to be another version of you. So they're always going to want the best deal. They're going to want to nickel and dime you. They're going to want to pick apart. Like we'll have guys come, oh, there's a crack in the stucco. Who cares? The building's 40 years old. It's nothing like, but they don't, it's a different type. Maybe it's a doctor or a lawyer and they just have the cash to buy it. And then it's like, how do you sell that as a portfolio? If I wanted to sell 108 units, that's a tough sell to anyone. No big company is going to do it. So I like buying stuff that I maybe even on their own. Some of my big competition wouldn't buy 100 units, but they would buy 1,000 if it was 10 100-unit buildings, right? Those people will be at the table. They'll pay a premium to get scale. They are not going to, and they're there through any market. The big institutions are generally going to be there in the down markets, in the up markets, looking for deals, whereas the smaller stuff kind of dries up. So but again, you have to start smaller, but just have that in mind. Like I don't want to buy 24 units because then you have a liability at that point. It's very hard to manage them. You have 20 different roofs. You have all these things, that makes it a lot tougher.
That I'm moving into the States, right? Expanding into the States. And one of the reasons that I was doing that is the access to larger deals, like 100-unit buildings, where I was finding that just being able to try to acquire those size of deals here in Canada, we're competing with the REITs and all these large conglomerates that are willing to overpay and lose money for the initial period. How have you been able to compete in that market when you're looking at such large scale with these institutional style buyers?
Yeah. So again, for us, timing helped so much, and this doesn't help a new person trying to get started. But when we moved, and it was kind of a funny story. That gym that we owned was called Fit 24/7. It had never been closed for even 1 minute. And the day the sale went through was the first 2 weeks of lockdown. So like timing worked. So we moved to Edmonton and the city was full lockdown. So we had money from the sale of the gym and everyone else had backed out of the market. At that time, it was like, we didn't know, was half the world going to die? What were loans going to do? Were people going to pay their rent? So there was a lot of fear in the market and maybe it was just stupidity on our end. We didn't have that. So we were like actively looking. So at any other time, if I came into the market today, I would have zero shot at the properties I'm buying. But at that time, there was nobody here. There wasn't. So we put an offer, and this is how the market works. It's a broker and a seller. What they want more than anything is certainty. So we put an offer. We were the only offer close to list. We still had to write basically a resume on like what we'd done up till now. We had to show we had the funds just for them to accept that offer because they wanted that certainty. But because of that, we bought one and nothing else had traded. And then we bought another one and it was like, so, they weren't huge properties, but no one else was really buying. So you got in with the brokers. They were all starving to sell something because that they're based on income. They have to sell stuff.
Commission. Yeah.
It's commission. And we had one relationship with like a finance guy. He kind of helped. He referred us to a realtor and then it kind of went from there. But because of that, we got in Edmonton. I mean, in any city, there's probably I'd say there's 3 to 4 brokers that are really the only guys that hold the deals, the good stuff.
Yeah.
They have a list of people and then anything that, if that list doesn't buy it, it goes to another list. And if they don't buy it, it maybe goes to market and it's crap at that point. So it is very hard to get in. We got on that list because of timing and we made it very easy. We never retrade deals. We made that very clear. We're like, hey, we are serious buyers. We're going to make this as easy as possible. So then we got on the list and now you're on the list. So it's like, hey, there's, when big stuff comes up, I don't know how many people they send it, 10 people that they know would buy it, or we'll get to see stuff before it goes to that list. But that's hard. You have to build that credibility. So when you start out, maybe you have to buy smaller stuff to get that credibility. Don't retrade. Don't put stuff under contract and back out. Yeah. They're just people. It's a people business. The broker is just the guy who wants to feed his family and
Yeah.
and the seller wants to sell the building. Everyone's on the same team.
Yes.
Yeah.
Yeah, and I think a lot of people don't realize the little specifics like that.
Yeah.
And if you're looking for a property on realtor.ca for a large building, you're never going to get the real deals. You're getting really the leftover stuff. Every now and then you might luck out, but there's usually some reason that that property has made it to the to that public listing. If as otherwise, it all happens in behind the scenes. I'm curious what you might say about that topic, because a lot of people are like, oh well, then that means that the game is rigged. The game is rigged. I'm never going to get a chance. How do people? Uh, I know what some of the things I've done, but what would you suggest are some of the things for people to be able to get to that big boy table, to be able to get there, to be able to look at those quality deals?
Yeah. Well, first, as far as saying it's rigged, I get the idea, and it is not rigged, but it's walled off in a sense. But I'm an example
Absolutely.
of someone. I came here with zero contacts and
Yeah.
no credibility, and it's 4 years. It's not like I've been here my entire life, right? So like,
Yeah.
you can do it. A lot of it, little things go a long ways. Like I said, these brokers are just people. If you're a nice person, a good person, and like, you will have to probably buy some smaller stuff to get to there, but they're not. You're not going to be a great guy who's bought some small deal and they're going to be like, we're never giving this guy a shot. But
Yes.
you have to actually show that. The biggest thing is the capital. If you come in and you've bought some deals and you've operated them and you've been good to work with, and you have X amount of it, you can show like, look, I just sold this. I have this capital. I'm looking for, be very specific, this exact deal size. I want a 50 unit, B class in this area. It has to be stabilized. I don't want value add. I want it built in the 80s. If you're specific like that, that's kind of where you'll get a shot. But if you just say, hey, send me anything big and I'm going to go after it, and they'll be like, no, right? Like,
No,
we
it's
don't know
not
who
worth
you
my
are.
time, right?
No.
Yeah.
So it, like I said, there's tons of examples of people who've done it. It's not this secret society of people by any means. And the other thing, you can look at anything as
It,
a weakness. So you can be sitting there saying, or a strength. So you can sit there and think, I'm the little guy. I can never get ahead. The beauty of it is you can move quick. So like, even me today,
yeah.
I don't have to go, if I want to put something under contract or make an offer on something, I can do that today. I can do it. A big REIT, they probably have to have a quarterly meeting and they have to go to their board and they have to allocate
Mm.
funds to it and they have to do it. That can be a disadvantage to them. Now, the advantage is they have very cheap capital, but it goes both
Yes.
ways. It's like they can't buy certain stuff, they can't use certain leverage, which you can. So there's all the things that you can use to your advantage. And I think, like, right now, what I like about where we are, and every company has a cycle where it's like, at the beginning, you're probably buying kind of value add, wood frame, walk up, garden style, whatever that is. And then it's like, you get to a point when you're big enough and it's like, okay, now we want to move into concrete build. And then it's going to be like concrete built after 2015. And you're going to keep moving that criteria. So for us right now in Edmonton, two of our biggest competition, they're in that last phase. They want to just buy properties that are newer built, concrete, large, very large, and they can hold them for 50 years and they don't have to sweat it. And it's a great investment. They don't have to put CapEx in. They don't have to do that. They don't want to put in the man hours. Well, I can come in and scoop up I love wood frame walk up right now. Now, I won't love that in 10 years because I'm like, I hate doing CapEx and the roof's going but it's like, you have that advantage now where it's like, if they don't want to be at the table for that, I can scoop it up. And then there's going to be a guy come after me 10 years after me, and they'll want to buy what I want to get rid of, and I want to buy the new stuff. So there's a cycle, right? And you just find your niche in there, right?
CapEx. Can you explain CapEx for us, just in case anyone doesn't know?
Yeah, just capital expenditure. So that's something most people never, for sure. If you're new, you're just like, you look at a pro forma and you're like, I'm going to buy this, and maybe they have 2% marked down for CapEx a year. That number could be 200% of your income, right? That's the
Yeah.
roofs, that's the boilers,
Yeah.
that's the windows, that's the doors, that's all the big stuff that's not like regular maintenance, repair and maintenance.
Yeah.
So that's what people underestimate. We did that.
Yeah.
I mean, the first 8 unit we ever bought, this was prior to us moving, was the perfect deal on paper. And I'm like, this is awesome. It had subsidized rents, guaranteed no vacancy through that program. Buy it, government cancels the program. 4 of the 8 tenants died that first year. So then they got moved out. So we were like, vacancy. We had to renovate the units. Then the boiler went. That was a big expense for a building that size. And the hot water tanks went. Then we had a lady called Alberta Health and Safety because she had pulled her own cabinet door off, didn't tell us, and she called them. So they came to inspect the building, and the railings were like 1/8 of an inch too wide. So then we had to replace the railings. Well, on an 8-unit building, a $20,000 expense, that's your income for a couple of years. Like that's it. There isn't money there. So that's what CapEx is. You have to have that sitting somewhere, like be able to have that, because if you put like the downside and where new people make mistakes is you can get 5% down financing today. So you're like, hey, I had 50,000. I was going to buy a duplex. Now I can buy an 8-unit. I can buy $1 million property. This is great. And then you put all your 50 grand in, and now you have a $50,000 bill come up. Well, A, your investment just got cut in half, and B, you probably don't have that 50 grand, right?
Yeah.
We just bought 94 townhomes, and they were all in blocks of 4, and one of the blocks of 4, the roof leaked, right? So that would, insurance did cover it, but usually that doesn't actually get covered by insurance. So that would have been $100 and some thousand, right? Fix. So had we only bought those 4 units, if we didn't buy the other 96 and we just bought those 4 and put 20 grand in, and that was our last 20, we're giving that back to the bank, right? Like that's the reality of real estate. It's not, you just buy it and it sits there, right? So that's CapEx is capital expenditures.
Absolutely. I just had a deal where we were looking at this apartment building, and then the engineering report revealed at a minimum $1 million in brick repair, right? The outside of the building, and of course we go back to the seller, and the seller says, I'll reduce the price by $25,000. And we're like, $1 million, 25,000. That doesn't add up. And that's how to, pick up your pants and walk out of the room, right? Like that's not the deal to continue on with, right? Unless you've got something else really strategic where you want the losses, you're a massive conglomerate and you want those kind of losses, it doesn't make any sense to buy something like that. So those are good things to be able to look at, right? And I'm glad that you explained CapEx for those that are listening, because it's really your friend in being able to know whether a deal is a good deal or a bad deal, right? So now, okay, we're running out of time. We've gone through a bunch of stuff, but I want to. Okay, so what's one word of advice that you would give to your younger self?
I think setting the goal higher earlier. Like for me, I grew up in the whole community, the whole town I was in was so small. So the level of success that I had ever seen, what the pinnacle of success was in the town was, it wasn't much compared to what's out there. And I went to a conference in the States, and it really changed my perspective, where I listened to a whole 3 days of speakers. There was billionaires and huge business people and all. And it just, about halfway through the first day, I just got, because I had always thought, something special about these people, or they started with something or what. And then you hear all their stories and it's all the same. They lived a regular life. Most of them grew up worse than I did. And now they're there. And then you hear them talk and I'm like, well, they don't sound smarter than me, right? It's like there's no special sauce. They just, they took the risk, they put in the work, they learned what they needed to, but they didn't have they're not a super genius person, and they didn't start with all this capital. And that kind of helps reinforce, because everybody's sitting wherever they are in life with something inside of them that's saying, hey, I can't do this. This is for other people, but it's not for me. No one grew up the way I grew up, and I can't do it. Like, it's nice that Elon Musk did his thing, but I could never do it because I'm just poor me and I'm working this job and barely getting ahead, right? But then you listen, I guess getting outside and seeing those people and realizing they're all just the same people, and then kind of building that self-belief where, like, hey, I can set the goal a lot higher than I thought, right? Maybe instead of setting it here, I'm going to set it here. And why can't I do it, right? There's hundreds of examples of people who've done it. So I guess I would tell myself that earlier than I learned it.
What's sort of next in the short term to be able to identify, to be able to execute on 1,000 doors? That's the new goal, right? So what's there for you to execute on to get those 1,000 doors?
Yeah, for me, it's always evolving too. Like our 10-year goal now is much higher. We want to hit the 1,000 in the next 2 years. So it's just, it's being able to raise capital, and also because we're in one market, we are kind of dependent on that market, right? So it's like I can't force people to sell me their building, so that dictates it a little bit. But it's building out, like, we've built out the whole management company. We spend a lot of time there, so it's like, if we're ever not able to buy something, we're spending all of our energy making it so I want to be the best operator in real estate. So it's like anyone can raise capital and buy buildings to some extent, right? People just fall into money or whatever and they can buy it. It's the operating that asset long term that differentiates the people who make it through all cycles and the people who don't. And we want to be that. So it's like if you really build out the system and the process for the managing of the asset and the property, you're in a great spot, right? When the tide goes out, and there's a lot right now, like in Edmonton, rents are moving so quick. Anyone who's bought something looks good, right? Like it's like you can buy a crappy building, not manage it right. You're still going to have it pretty full. You're still going to get rents up. When that changes, then that all changes, right? And the good operators are the ones that say, so we spend a lot of time there. We want to be the best management company. We want to be the most efficient, want to get the most out of those buildings. And then we'll be in a really good position when I look forward to a downturn, right? I'm like, that's when the opportunity comes.
Yeah, love it. Okay, look, I've already gone over your time, Shane. Loved having you on the show. Any parting words that you'd like to share with us? I mean, obviously, you got to let us know how to get a hold of you before you go.
Yeah, I'm pretty easy to find. Shane Unruh, pretty much anywhere. I think on Instagram is Shane Unruh _ my business one. We have a podcast called Scaling Up. If you check that out, and we keep people updated on those two things.
Love it. Well, guys, check that out. Scaling Up with Shane. Guys, go give it a follow. Go give it some likes. And Shane, love it. Thank you so much for coming on the show today, sharing all that you shared. And I know there's a whole list of topics that we could have still gotten into, but you just dropped a wealth of knowledge for the listeners, and really appreciate it. Really appreciate you coming on today.
Well, thanks a lot for having me. I appreciate the time. It takes a lot of work to put on a podcast, so hopefully people appreciate you for it.
Love it. All right, guys, thank you for being with us for another episode of the Four Horsemen of Real Estate podcast, and we will see you next week.
Even the ones around, trusting their word. They walk the talk in the world of investment. They make their mark.